Hi traders and welcome to the Technical Analysis Market Watch on Friday the 6th of June. So I've seen some good action this week, especially early in the week, but it has been a little bit more subdued over the last couple of days with non-farm payrolls fast approaching. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've seen the full range of motion again this week from the lows at around the 20 moving average and around that sort of 64.20 mark, all the way to basically 65.30-ish, which is a bit of a test of the highs over here, and it did pull back to that very difficult level to break through at 65 cents right now. So I've drawn up a bit of an ascending triangle there because you can actually see that pattern playing out. You can see that we're getting the higher lows are forming. We've got the equal highs at the top, which actually gives us the triangle pattern, of course. But it is being bolstered by the 20 moving average, which is actually also tracking up the ascending part of the triangle, which generally is a really, really good sign that a potential breakout is imminent. So if that pattern was to break out, yeah, we can see here the target would be around the sort of 66.20, which is the range of the base of that triangle. And of course, around this area right here, which is 2/3 of the way through the pattern, is where you would want it to break out. So we're going to keep an eye on it very, very closely over the next few days because really it is trying to push up. Every time there's a lower high and a higher high and a higher low, when the higher low is being formed, it's generally meaning that the sellers are losing the battle earlier and the buyers are kicking in momentum earlier and earlier and putting more pressure on the top every time that happens. So it is generally a pretty good sign, especially when it is being tracked by the 20 moving average. So certainly I watch this space. It's a very full triangle. There's no question about that. There's not much white noise there at all. So definitely one to watch. If it does break out and we get a daily close above that level, you would think that the 66.20 would be the logical target given the pattern that is playing out there. But it also proofs itself with a very strong resistance level. We know that it was support right through here. So it does proof itself with another level. So it'll be interesting to see how this one plays out, but we'll keep a very close eye on it. If, of course, it fails, it needs to break all the way down past the 20 moving average in order for us to look for shorting opportunities. But if you're looking at shorting scalps at the moment, I'd only be going to the 20 moving average or the ascending portion of that triangle until a daily close below that level. After that, then we're looking quite a bit lower, around that sort of 63.80 again, but it's got a lot of work to do before it does that. All right, over to the US dollar CAD. And we can see here another weak session, and really, like we've had a 4 or 5 in a row now. It's starting to break down. The level that we're really chasing is a 136. We can see here that we've got pretty strong support. That is the level that we're looking for. We've got the lower low sequence. There's no question about that. It hit the 20 moving average and it sold off it as it should in a downtrend. So and we have got a weakening US dollar, of course. Like we'll have a look at the dollar index shortly, but you can see that it certainly has continued on, not very far away from the target of 136. It needs to find support there. Otherwise, really, the next logical level is around that sort of 134.40 area, which is this level here. I'll pop a line there because that is our secondary take profit on short. But in the first instance, we would be looking for support at around that sort of 136 level. So for all of the shorters out there, look, obviously the clear obvious short was down to 137, and you would be already out in that one. That's our favorite trade, the one that we go to the lower low and take profit there. But the next target is the 136. So if you're still in, there's still opportunities to get into that level there. But just be mindful that it might turn around from this point onwards. And if it does, the target's going to be the 20 moving average and 137.80, which is the next high. But also if the moving average is still there, depends on how fast it does it, of course. If the moving average is still hovering above that level, you would think that would provide more resistance for it. So 2 ways to trade it: a little bit shorter down to 136, or if it does turn around from here and starts to push up, 137.80 or the moving average, whichever one comes first on the CAD. All right, US dollar yen, and this has been a bit of a mixed week, really. We've seen, 4 or 5, candles that have basically just given back everything they've put on the day before. We've got full range candles, as you can see, and that's a level of consolidation. Look, it's one of those ones where it could be a head and shoulders, potentially. And it's got a little bit of work to do before we can call it that. It's got to break the neckline, of course, but realistically, you can see the shoulder, head, shoulder. but it is fighting very, very hard here. It's staying underneath the 20 moving average. The 20 moving average is doing its job, and there is a resistance level there at 144 as well, of course. So that's more than contained at this week. We can see every day has been replicated by the inverse candle. So realistically, I wouldn't be doing anything with this until it breaks either 142 with a daily close, so we want to see a daily close below here, or a daily close above the 20 moving average, which is around that 144.50. A daily close above either of those levels, and I'd be looking to the next target of either 140 or the 146. But intraday, if you want to trade it and you want to scalp it, I would be sticking between those two ranges of 142.50 and 144. So a pretty good range still. Like there's still 150 pips there that you can actually trade actively, which is good, with two solid boundaries, but a daily close on either side, and I would be then starting to look for the next big move on that one. All right, over to the all-important dollar index. It's tried very, very hard to break lower again today. It has pulled up. Look, I would have been very surprised if it did do a massive move prior to a non-farm payroll. What happens after the next session might be a little bit interesting. Monday will give us some more insight as to whether the job numbers were as expected or worse or better. That will give us a leading indicator as to what the dollar index is going to do. The way I see it, it's forming a very big double bottom. I mean, if we go to a weekly, you can probably see it more clearly, but you can see here we've got a bottom and another trough here. Okay, so they're the two troughs, and then you go back to the daily, and you can see that we've got big MACD divergence as well. Now, there's no real surprise about the divergence, because obviously when markets start to slow down, the moving averages start to get closer and closer together, which of course is going to bring the histogram closer together as well, or closer to the zero line. So it's not really a surprise that we're getting divergence, but it is still at an extraordinarily important level. And really, the one we've already said it many times over, the 98 must hold, or it's going to be a bit of a sell-off down to probably 96 without a lot of trouble. So it's fighting very, very hard for that. This week has been a little bit like the CAD, a bit of a mixed week. We can see the candles have effectively filled each other in. Today was the first attempted sell-off, but it did pull up and hold up above that 98.80 level again. So while it's holding up here, we'll give it the benefit of the doubt. We know it's the last line of defense, but we will want to see a close above that 20 moving average prior to any long opportunity. So if we get a daily close that actually gets back above that 99.50 area, and most importantly above the 50 moving average, then we'll start to get a little bit more confident about a higher high, higher low sequence like what we saw here. But it's still got a fair bit of work to do at the moment. Let's just see if it can hold up above that 98, because that's the most important thing right now. The euro, of course, is the inverse. We'll go to it now. It attempted to break higher. It's trading above the 114. As you can see, we've got a bit of resistance at that level. It pulled back a little bit, just like the dollar index did, of course, just inversed. And we'll see how this one plays out. Look, if we get a close below the 114, we can look for shorting opportunities down at the 20 moving average. That's all I would do. I'd only be looking for scalping opportunities right now. This is not a long-term play at the moment until the dollar index gives us some clarity. Because if the dollar index starts to turn around and push up higher, there's no doubt the euro is going to come down to a pretty decent level. But at this stage, all we see is a series of higher highs and higher lows. And although it's at the most recent high or very close to it, it's still running with a fair bit of power. So realistically, a lower high, lower low sequence underneath the 114, and we'll look for a trade down to this level here at about 112.80. But if it starts to cycle higher, look for the previous highs, the 114, 80 to 115.20 area. They're the two areas I'd be aiming for on the euro. And finally, the S&P 500 has been a very, very lackluster week, especially the last 2 or 3 days. But that's not unexpected on a non-farm payroll week. So you can see that we've got really not much action whatsoever. A little bit of a sell-off here today. We know we've got resistance at that 6,000. It did touch it today just briefly and then sold off that point. But it really is just angling for the non-farm payroll result. I don't think we're going to see any action before that comes out. Very straightforward. If we're trading above 6,000 on Monday, I'd be waiting for a pullback to that level and then start looking for the highs at around the 61.30. If we are still trading under 6,000 and we start to cycle lower, I'd be looking for a move back down to 58.50 and or the 20 moving average, depending on how fast it moves. But 58.50 would be the target on the US 500 if we start to see a cycle lower high, lower low. But I wouldn't be doing that until Monday. So we really need to see that happen on Monday, after non-farm payrolls has been released. All right, so I hope you had a great week's trading. We've seen some reasonable moves earlier in the week, but it's been a little bit lackluster towards the end. So we'll see what non-farms give us and see where the markets start to trend on Monday morning, and we'll follow the lower high, lower lows, or higher high, higher lows on nearly all of the things that we've been looking at over the last few weeks. Thanks, everyone, and have a great weekend.